All right, so time for a trade day recap here. Trading NASDAQ futures using the micros contract. You can see, where is it? Right up there. I'm green on one account, break even on another. I'm super bummed about the break even on the one account, and I'll share why here in just a minute. But before we get into the actual trade setups, I guess let's start with just a higher time frame analysis, share what I was thinking going into the day. Um, so starting off here on the weekly chart, here is MNQ over here on the left quadrant, and basically we've just been selling off for weeks. So I've, since whatever October, get a down move and then an up move and down move, and so we can see we're leaning a little bit more bearish. And in the case of the recent price action since January, early January, we just been closing bearish candles. So we do have these levels of support, this fair value gap and this fair value gap right here that keep kind of supporting price. So paying attention to those, but nonetheless still overall bearish. Previous week's low has been swept already. And what are we at, Tuesday? Um, so with that in mind, we're going to dive down to the lower time frames. Here's the daily chart, and here is today's candle. Now, earlier this morning, when this candle was printing, before New York opened, it was down lower in here, and we have an unfilled fair value gap. We'd already swept previous day low, so I was kind of like in the middle. I mean, I'm feeling bearish, but I could also see it coming back up and tapping into this fair value gap before continuing lower. One of those kind of things. Now, on the 4-hour chart, here is the 6 a.m. candle. We can see just how of a bearish reaction we had from this 4-hour gap on this candle. Price just rejected pretty solidly and closed below those lows. So pretty bearish signature right there. And then on the 1-hour chart, where are we at with, here's that 9 a.m. candle. So, and then even the 8 a.m. candle tapped up into these equal highs right here and came back down. So pretty dang hard. Looking at the 15-minute chart, we can kind of see the same kind of price action where pre-market open swept London lows, ran up real hard. And this is kind of where I was expecting to see the short from. And the leaning more bearishly on the day, I was expecting to short somewhere up in here, London highs, something like that, and short all the way down here. So that's what I was expecting. What I wasn't expecting was this reaction down in here. And we'll get into that here in just a little minute. Let's go back to the 1-minute chart. So 8:20 in the morning, 8:20 macro, we had this nice little inversion right here. And I was thinking about taking this inversion. We had a sell side sweep. We had a higher time frame gap. We look at I don't even know what to call this mess of levels, these higher time frame levels. We can see how perfectly price tapped into this volume imbalance. After sweeping major sell side liquidity, it swept London lows, it swept this 4-hour level. And once we had tapped into that in the macro, then we had formed this inversion. And this candle didn't close above this inversion fair value gap, so I wanted to wait for the next close. However, this one was a little bit sluggish, and I just kind of wanted to wait and see. And I was noticing these candles kind of really being struggling to close above. And so I decided the breaker was close enough that I could take the breaker entry as opposed to the inversion. Sometimes that's not possible. Sometimes you get these massive inversions where it's just not possible to take the breaker. But in this case, we got saw this return back down to the fair value gap, swept this low on the 1-minute here, and then got some nice momentum on this candle, closed above the breaker, and I marketed in on the close of that candle. And then I ran it up to these relative equal highs up in here somewhere, maybe a little bit more like that. But there was a bunch of, we had basically midnight open, and then see we had all of these higher time frame levels stacked above. So right there was 2.5R. I would typically target 3R. And that's fine by me. I was actually pretty happy with this trade because I got out right before the pullback. And that's what I don't like. I don't like riding through these pullbacks with trailing drawdown on my accounts. It just can get a little sketchy because, right, if you can imagine this scenario here, let's, oh, it didn't copy it. There we go. If I was targeting, somewhere up in here and on this trade, and, I'm up, I risk 250 on the trade, let's say, and I'm up here and I'm, up, call it 700 something bucks. And then it comes all the way back down on me. And let's say I get out at break even, or I get out at like, a half R because I trailed my stop. Well, with the trailing drawdown, that means, whatever the difference is between the highest and the lowest in that trade, that means my account is going to have that much less buffer because of the trailing drawdown. So I'm all for getting out of the trades as quick as possible. Also, even just psychologically, it works better for me. I'd rather, like, I mean, obviously, I'm just not the kind of trader that could have held all morning through all of this and then gotten 11 hour. That's just, my psychology doesn't do that. So, anyways, beautiful little breaker trade. Also had, so some of the reasons why I took it, we had these more reasons why. Nice trend line liquidity. We can see that it's making these lower lows like this down on this trend line versus where sometimes we get price where it goes like this, does this, sweeps this high, comes down, and you start getting these sweeps. And then that's not such a clean trend line. So that's a high probability target. Also had these relative equal highs sitting above. So there's plenty of reason. Price was super deep down into discount. A lot of reason to go up. So that was pre-market and pretty stoked about that. I took that on the one account, the bottom account, the one that's got 864 in it for today. That was the first trade of the day. Now the second trade. This is where I got bummed. I was so bummed on this. And not because I broke even. I'm good with breaking even on trades. I actually have a reasonably high break even rate on trades. It was this setup here. So we had the 930 open, and there was this kind of breaker setup inversion. It wasn't too clean. I wasn't really looking for longs more up in this premium. I was kind of waiting for the manipulation and the short. So I was seeing this as like accumulation, manipulation somewhere, and then distribution for more sell side. Here we can see price tapped into the previous day equilibrium. That's 50% of the previous day's candle and 25% of the previous week's candle. And we had a little bit of chop right there. And I think I took this on the 2-minute chart, which is now it's going to screw me up, isn't it? So beautiful looking 2-minute IFVG. Had everything. We had bearish SMT, tapped into a higher time frame level. We had seen this, I think it was a 4-hour fair value gap price tapped into. And then here's the criteria that I went in on this trade. We had some relative equal lows down in here. We had just a bunch of nice trend line liquidity. If this had been equal lows, it would have been even better. We had a 5-minute and a 15-minute C2 candle, which also helped confirm a reversal up in there. I'll show you what those are. So in the case of this trade right here, see how the 930 candle failed to close above these highs? I consider that a C2, even though it did close above that candle. But on the 5-minute chart, where is it? Was this candle right here? Did not close above that candle. So back to the 1-minute chart here. And I entered in on this trade right here on the 2-minute, just marketed in on both accounts. So this was a copy trade. And so I broke my rule basically. And my new rule, or I forgot my new rule. And I had it printed out on paper and I even read it this morning and I still forgot it. Now, originally my rule was once price came to 1R, I would typically go break even and wherever that is. But I've noticed many times, because typically if price comes back at me too much, I'm pretty much just wrong. I've found that out to be totally true. So I'm good with going break even early. The only thing I've found recently, and I've kind of refined the break even rule, is that if it doesn't retest this zone here, my entry zone, I can often get tapped out at break even if it retests me just like this and continues on without me. And I'd forgotten that rule. So, somewhere around here, it's like about 1R. I went break even, comes back at me pretty aggressively on the 1-minute chart pretty quickly. And I also had seen all of this just PD array salad, a whole bunch of PD arrays in this zone. So I also knew there was some pretty strong resistance, which was kind of another thing I was thinking about. So maybe I was thinking more about this resistance than I was about my rule. But I went break even on this trade. Boom. I got tapped out by just a couple of ticks, and then it just dumped all the way down without me. So a little bit salty on that one. Obviously, like, I'm cool. It's good. Break even's better than a loss. I'm bummed that I just flat out forgot my new rule, and forgetting the new rule cost me The opportunity cost there was probably $700 on that trade, or more. I think I went in a little bit heavier than normal on this trade because it was exactly what I was looking for. Probably I went in with like 270 risk, 275, something like that, and super bummed about that one. So at that point, I was just kind of like, I stepped away from the charts and I started to notice that we had some little bit more bullish price action, and we swept these lows down in here. And the way that price started looking, it kind of had me convinced. So here's another thing. Let me show you real quick. See if this loads up. Often when we get, so here we got this reversal at 9:30. We got a trend in the first hour. And when we get a strong reversal at 10:30, often the later half of the session reverses and does not continue the trend from the first half of the session, the New York AMP session. So I saw that happening. I'm like, oh, that's super interesting. And like, it wasn't coming up here for, just a stop hunt of this level or something to continue down bearishly. So in here, I was realizing I'm probably off sides for the day and watch the rest of the New York AM play out. And then once I saw all that, I was looking for a lunch trade setup. And turn this off. Let's see here. I don't know. Oh, the kill zones. There we go. And so the lunch trade setup is basically looking for when we get this happened, like we did this morning, I'm looking for continuation. And the lunch hour from 1 to 12, or 12 to 1, excuse me, a little backwards. I'm looking for a liquidity raid and continuation. And that's exactly what we had happen this afternoon. Let me get back down to the 1-minute chart, I suppose, because that's where I took it. So we can see that the lunch zone is from 1 o'clock, 12 o'clock, dang it. You can see what happens when you get up at 4 a.m. to 1. This goes to 1:30, I think. This box is supposed to be 1 o'clock. Okay, there we go. So it's a 1 o'clock, and typically the macro is, if we look at the macros, the 1250 macro lately, like the last few weeks, has really, and even the last year, often if there's a setup in the 1250 macro, sometimes the 120, it's one of these two macros. If we see a stop hunt, it's the lunch raid's one of these two kill zones. And I saw it here. We saw these kind of like relative equal lows just getting taken. We had these relative equal highs. We had all this trend line liquidity building. And this is another key. Is like we see this, because here was this inversion I was looking at too. I'm like, oh, it took some semi-equal lows, and here's an inversion, and I just wasn't into it. Didn't take it, because typically with the lunch rate, we get a nice impulsive move. And then once I saw this, see how this distribution towards sell side was nice and hard and heavy? That's what we want to see. So here's some accumulation and then some distribution down hard. Then that came back down into 50% of the morning range. So if we look at the, from the high to the low of the morning, right there, we can see, the premium discounts opposite or backwards. So let's just correct that. We can see that the trade came back down into the 50%. And that's kind of what we want to look at with a continuation lunch rate. It's rating lunches accumulation liquidity for PM continuation. And that's because we had a reversal down here. So anyways, saw the lunch raid. We had this inversion right down in here, this nice looking inversion for value gap, but this candle closed so hard above it, I just went in on the breaker and gave myself a little bit of room. I forget, my stop might have been more like down in here originally. And then we got some nice movement to the top side. And here was where I remembered my rule from earlier. I remembered I needed to see 1R and a retest. So I waited for a retest, and then it just didn't give me 1R, and it was just coming down and down and down. And once we formed this candle here and this candle here, this close above on this candle right here. So once that happened, close above on this candle, I tucked my stop to reduce my risk, and I said, that's it. I want out of the trade if it's just going to accumulate. Because like I said earlier, in my experience, the vast majority of trades that start accumulating don't work out in my favor. So I was quite surprised actually when this trade did work out in my favor. And so, anyways, playing out, I targeted a little bit under 3R on this trade because we had the previous day equilibrium. And sometimes I like to front run my exits, because it can come, just to find a high and then retrace a whole bunch. And this one didn't do it too bad. You can see I probably exited in this candle or this candle, but I really like getting out of trades when you get that first impulse leg, and then you don't have to sit here through this, and then it comes like all the way back down and then goes up, which, just like I said earlier, isn't my thing. So that trade right there was a perfect exit, two perfect exits on the day. I'll take it. I think that's up probably 4R on the day. I risked a little bit lighter on this trade just because I had already taken two trades. And then I ran into copy trader issues on this trade too. That was a little bit of a bummer. The copy trader failed to, it kept it reject placing and closing the orders on this trade. So eventually I just had to go in with one account, and I can show you the execution marks here. We can see I got in and out two times on this trade, on this candle. Before, on the third time, I just had the single account set up, and took that trade right there. Here we can see on this trade here, I entered on this candle, and I got stopped out on this candle right there. And then here was the morning trade, entered on this candle. 3 minutes later, closed it at 2.5 hour on that trade. So that's a recap of today's price action. It was pretty nice price action today. I'm not going to lie, I'll take it. Definitely surprised to see it respond bullishly, which we can even go back over here to the higher time frames and see where we're at on the daily. So the daily is closing a compression candle, or close to closing a compression candle back within this range. So that might be a reversal. It's not what I expected. I expected it to come down into this zone, to sweep this low and then reverse. But you can only predict this stuff so well. So we'll see where this daily candle closes. I think it's going to be telling in terms of the bias for tomorrow. If we're going to be bullish, we're going to be bearish. And yeah,